MARA Holdings MARA is buying Long Ridge Energy for about $1.5 billion, adding power capacity for Bitcoin mining and AI compute ambitions. The acquisition is not just a mining story. It is a bet that controlled energy can become strategic infrastructure for advanced computing. The confirmed event is that MARA agreed to buy Long Ridge Energy and Power LLC for roughly $1.5 billion, including debt. The reason this belongs in a crypto news read is that Bitcoin miners are increasingly competing for low-cost power and data center capacity as AI demand changes the value of energy assets. The opening pressure point is MARA buys into power capacity against energy control versus AI execution. The first confirmed detail is the deal is valued near $1.5 billion, and the immediate reason to care is that Long Ridge includes a 505 MW facility. That means the viewer should track deal close and AI contracts instead of treating the first reaction as the whole story. The baseline keeps the story grounded. The confirmed baseline is a 505 MW gas turbine facility in Hannibal, Ohio, plus more than 1,600 acres of industrial land. The deal is expected to raise MARA's owned and controlled power generation capacity by roughly 65%. Without that frame, it is too easy to treat the event as bigger or cleaner than the evidence supports. The two facts that set the baseline are clear. The Ohio site has 1,600 plus acres, and capacity rises roughly 65% after closing. That frame keeps 505 MW facility is included connected to the actual consequence rather than floating as an isolated statistic. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. In the MARA Holdings MARA story, the mechanism is straightforward but important. The mechanism is vertical integration. Owning power can lower input risk and support mining, AI, and supercomputing infrastructure. The site has grid, water, fiber, and rail connections, which can matter when converting energy assets into data center capacity. The viewer should focus on how that mechanism changes access, risk, cost, or trust. In practice, owned power supports compute strategy is the hinge between the confirmed event and the next market or user response. The mechanism split is simple. Owning power can lower input risk, while data center assets need grid and fiber. If that hinge fails, the strongest title-level claim loses force even if the story keeps attracting attention. The affected side is where the story becomes practical. MARA shareholders, Bitcoin miners, AI infrastructure customers, power market participants, and Long Ridge staff are affected. The practical consequence is a larger energy footprint and a possible diversification path beyond pure mining economics. The strategy depends on execution because AI infrastructure development is scheduled to begin in early 2027 and operations are expected later. The useful boundary is that mining shifts toward infrastructure, while customer demand is not secured. The impact split is MARA can diversify beyond mining, and AI customers still need signed commitments. That keeps the impact focused on the people, markets, or systems actually named in the evidence. The confirmed facts stop before the unresolved piece. What remains unclear is regulatory approval, final financing, customer commitments, and whether AI demand materializes at the site. That does not prove that the acquisition guarantees AI revenue. A better read needs deal closing, customer contracts, development milestones, and power cost performance would clarify the strategy. This is the line between analysis and speculation. The unresolved split is regulatory approvals remain required and AI revenue is not guaranteed. The story can stay important while customer demand is not secured remains unresolved, but the stronger claim needs visible proof. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The clean trigger to track is this. Watch Hart-Scott-Rodino review, FERC authorization, deal closing, and AI site development in 2027. If the deal closes and investment-grade customers sign capacity deals, the story can move from acquisition agreement into compute buildout. For MARA Holdings MARA, that is the follow-through that matters. The trigger split is expected in H2 2026, and AI development is planned for early 2027. If that trigger does not arrive, the story may stay in acquisition agreement longer than early attention suggests. If it does arrive, compute buildout becomes easier to evaluate with facts instead of assumptions.